Hey, it's Rocky Tapscott here from the Trend Traders Club. And first of all, I'd like to thank you for registering to watch this video. And if you like this video and you'd like to get more regular training videos and case study videos where I take you through more examples of what I'm going to share with you today, first thing I'd like you to do is to check your email. And in your email, it might be in your spam folder or it could be in your promotions tab in Gmail if you use that. You'll find this email and the subject line says confirm your subscription. It'll be from me, rockford1@bigpond.com. Confirm your subscription. You want to receive my stock trading videos and case study emails, please click the link below. Just click on the link in that email. That will confirm your email address. I'm using double opt-in here because I only want people on this list who really want to hear from me. So if you don't want to hear from me, just don't click on that link and you'll never hear from me again. But if you like what you see today and you'd like to get more of what I'm going to share with you, please click on that link, confirm your email address, and you'll hear from me every day, every second day. And every time I send you an email, it will have some actionable ideas, content, tips, or strategies you can use in it so that you can take it and use it straight away in your trading. The other thing I'd like you to do is to take my email address here, rockford1@bigpond.com. That's my main email address. Add that to your contacts, or even if you want to reply to me, that will add it to your contacts for you. Just say, hey Rocky, just confirming my email, or tell me a bit about yourself, or just say hi. Whatever you'd like to do, just so that it's in your contacts, and that way all my messages will come straight into your inbox. They won't get filtered out, and you'll get every message from me. As I said, everyone's going to contain something useful that you'll be able to use in your trading. So who is this for? Ideally it's for mutual fund and stock investors, people who hold and don't trade every day or every few days. It could be for swing traders, position traders, people who like to hold positions for anything from 3 days to a week or 2 weeks or even months. And I'll show you some examples of trends that have gone along after the little entry signal I'm going to give you today. Trends that have gone for months and have turned out really well for anybody who noticed this entry signal and who managed their trades correctly. And I'll talk about all of that shortly. Having said that, it will still work for intraday traders, day traders. It'll work on a quarter-hour chart, 1 hour chart, 4 hour chart, whatever you like to use. It's just that you get more false positives. So on a daily chart, it works really well, but you have to wait a while for the trades. You can use an intraday chart and get more trades. So it all depends on your trading style. So if you are an intraday trader, keep watching, watch this video all the way through and go back and back test it on your charts and see if you can use it as well, because it's a very handy little entry signal to get to know. So what's my trading style? It's what I call Essentialism, and that's a book. If you go to Amazon, buy the book Essentialism, one of the best books I've ever read. It teaches you to take away all the superfluous stuff, all the extraneous stuff, all the things that don't really matter, and focus on one core thing. And the idea is to have your trading simple, not complex, because the more complexity you have, the more things you've got to watch, the more chances there are you'll miss something, and the more opportunities you have to make a mistake or get confused or just completely overwhelmed. So the plan here is to keep everything as simple as possible and focus on the essentials, which is the price action of the chart. Some suggestions before we start. Minimize distractions, and as I said, focus on the price. If all you have on your chart is a price bar, you can see the raw price action. This is what you're actually trading. You're trading the price. You're not trading anything else. You're not trading stochastics or RSIs or trend lines or all that stuff. They can be helpful, but they can also be very distracting. So we're going to focus on trading the price, which is the core thing. The essential thing on any chart is the price. Ideally you want to trade with the main trend. You've heard that a million times before probably, but it's true. If you're trading with the trend, the trend legs are typically longer. Well, they're going to be longer than the counter trend moves, the reactions. So if you're trading with the longer legs, statistically you're going to have more opportunity to be in the right way and to become a successful trader. If you're trying to trade the counter trends and you're trying to pick tops and bottoms, you're trading very high risk strategies that typically won't turn out very well for you in the long term. So try and stick with the main trend. Try and look to enter the market on retracements. So the market rallies, comes back down, and then it starts to rally again. Try and enter in there, and we'll look at some of that price action shortly. Hold through the minor corrections. If you're already long and the market's above where you got in, try and hold through the counter trends, because it's very hard to pick the tops and the bottoms of swings. Sometimes you get it right, more often than not you'll probably get it wrong. And if you get out, then where do you get back in again? And sometimes these trends that I'll show you some of the examples, They've gone on for months. So you don't want to be trying to second guess the market, get in and out, pay brokerage, and have all that activity when you really don't need it. You want to hold for the big swings. And number 6, the biggest aha I've had since getting caught in the 1987 stock market crash, which we'll talk about shortly, is this: ignore everything. Focus on the price. Don't listen to CNBC. Don't listen to all the pundits talking about the market's going up and the market's going down and the market's going nowhere. Look at the price action and decide for yourself. Because if you start bringing in all this extra information, next thing you're overwhelmed, you don't know what to do, you're paralyzed, a perfect trade setup comes up and you'll second guess yourself and you won't pull the trigger, and then you've missed it. And then if you start chasing the market, you don't know if you're going to be in or out. Where do you put your stop loss? What do you do? So focus on the essential thing, the price, and don't listen to everything else. Take all the indicators off your chart and just test this and just see how you go. Back test what I'm going to share with you and see if it works for you. So with that brief introduction, let's get started. So as I said, I call this the Essentialist Guide to Analyzing the Stock Market. And what I've tried to do since getting caught in the 1987 stock market crash is cut everything down to its core essentials and focus on the price action. Now this is a chart of the 1987 stock market crash. I wasn't trading then. I went and saw a financial planner and he said the stock market's the only game in town. So in March 1987, I put everything I had that I'd saved up for the previous 10 years of work, which was a fair bit of money, put that in the market. Then I went and borrowed more, and I was putting in several $100s a week because I was earning good money in the coal mines, several $100s every week into share funds on which he was making a 5% commission. So he was happy, the fund managers were happy, and I was happy at the time because I was making more in unrealized capital gains from being in the market than I was from my job. It was unbelievable. I thought, how long's this been going on? But the trouble is, the market was going vertically up, and as you know, when the market goes up vertically, it quite often comes back down vertically as well. So I was in there from back down here in March, and up it went, and I thought I was a genius. We came up here, and then on the 3rd of September, I think it was, and no one rang a bell, and everybody was their most bullish up there. Everybody's screaming the praises of the stock market. The entrepreneurs in Australia here were just going crazy. They were doing deals and everything was great. And then on the 3rd of September, the music stopped. And then we had this first big reaction. And as you can see, this is a big reaction, bigger than all of the other ones back down here. Now, knowing what I know now, that was a warning signal that, hang on, something's changed. We're coming up here with little tiny reactions. Then we had this big pullback like this. And it tried to rally and it couldn't. Now I'm blissfully, all through this, I'm still putting money in every week, all through this reaction here and then up to this lower high here, which is about halfway back. 50% retracement is typical of a counter trend rally in a new trend, which was down from here, but we didn't know. I didn't know it anyway. And even right through down to here, I was still putting money in, and I put money in here, and then as you can see, the market just crashed. And at the bottom down here, or probably in here somewhere, I sold out of all my shares because they were dodgy gold miners and they were entrepreneurs and they were all these stocks that in the end most of them went bankrupt and they just weren't going to come back. I looked at the portfolio, I took it to the financial planner, a different financial planner, and he said, this is all rubbish. You probably want to get out of most of it. And he was, that time he was fine because he was right, because most of them went bankrupt or they finished up being worthless. So at the bottom of this down here, when I got out, I had a negative net worth. So I'd taken all the money I'd earned for 10 years working in the coal mines, working really hard, put it in the market, borrowed more money, and I'd lost all of that, plus I'd lost more because I had to pay back the loans. So I sat around on my hands for about 3 months and I had a bit of a nervous breakdown. I didn't know what it was then, but that's what it was. Looking back, I was just shaking and shivering and I couldn't function, I couldn't think, I couldn't do anything. Then I came back out of that and I didn't go near the market for 10 years after that. I was so frightened by it, and I went and bought houses and did property and did other things. And then I just didn't look at the market because I was so burned for over a decade. There's the Dow. You can see this. Up she went, same thing, came down, had a lower high here, and then it crashed. Now I'll show you these charts again at the end with the indicator on them that I'll show you throughout the rest of this presentation, and you'll be able to see that this was Blind Freddy could see that this was coming, but I didn't know what to look for. No one I knew what to look for. The financial planner certainly didn't warn me about it. And you'll look at these charts again with this little indicator on them and you'll go, aha, now I see. There was every opportunity to get out of this before. There was still a loss in here, but there was no crash if you had have seen the signal and got out. But I didn't know about it, and down it went. So that's the Dow there. And then 10 years later, I'd been buying houses and I'd been talking to vendors and talking to owners and doing all the property things. And I'm an introvert. I didn't really enjoy that. I didn't want to be out talking to people all the time because I just wanted to sit at home and do my own thing. And then I saw stock trading again. I thought, I saw this course, bought this course, it was $1,000, and it talked about GAN and all this stuff, And I thought, this is what I could do. I can sit here, I can just talk to the broker, because you didn't have online trading then. It was all, had to pick up the phone and talk to a futures broker or a stockbroker. So I did that, and to get good at it, I decided I was going to sit down and hand draw charts, because that's what they taught you in this course. So I sat down for months and I hand drew, like each one of these lines here is a day, and I don't know what year this is, but each one of those is a day, and it's done on a piece of paper with a marker pen, and I put all the prices top and bottom and all the ranges and all of that. I went right through this, and I went right back to the start of the Australian SPY contract, the share price index contract in 1983, and I drew hand-drawn charts from 1983 to the 2000s, whenever it was that I was doing this. I can't exactly remember now. Of course, that's me there with a bit more hair than I've got now. But I did all this, and I kept looking at these charts, trying to work out how to trade. And I took two big positions, and I blew up the first account while all this is going on. And then I kept trading again, put more money in, blew up the second account, because futures, as you know, is high risk. You can lose more than you have in the account. And I was getting down. I'd lost all my money in the stock market crash. I'd made some money in houses, but I didn't have a lot of cash. So I thought, okay, before I risk the third lot, I'm going to sit down and look at these charts and try and work out what the hell's going on. And so I did that. I did stop trading, sat there and looked at all these charts, and I put them all out in tables, and I'm just walking around looking at all these charts, reading Gann's books, and something struck me that he said in one of the books, I forget which one it was, but he talks about the price action, and it was hidden in there on page something of one book where he talks about this little thing that I'll show you and explain to you that I finally got from trading. And I started paper trading it, and it worked. Then I started live trading it, and it worked. And then I started doing it in commodities, and it worked. And then I started doing it in stocks, and it worked. Not all the time, but it was very consistent. And the beauty of it is, it helps you get into the start of a trend very early, and some of those trends, some of them stop, some of them fail, some of them turn into losses. Can't help that. But they're small losses compared to if you're right, and you're right more than you're wrong when you do it right, the trend goes on and on and on. And I'll show you some here that just went on and on for months following this little signal. So then I started doing this, and I used to go into stock trading forums and we talk about this, and it came to be known as the Blind Freddy setup, because people said to me one day, there's this big long trend and it went up and up and up from say $5 to $20, and one of the people said, well, how do you know when it's going to start? Like, how do you know this is going to happen before it starts? Blind Freddy can see it now, but what is the entry signal? Like, where do you get on this so that you're fairly confident it's going to go up? And I showed them this little thing that I'd worked out, and that became known as the Blind Freddy setup, and everyone joked about it. And then people would come into the forum and they'd say, is this a Blind Freddy? Is this a Blind Freddy? And the whole thing just blew up. And it was really exciting times, because people were coming into the forum and bringing these trades with them. And some of them were, most of them weren't. They were trying to force a trade, which if you've ever done that, you know what I mean. It looks like it kind of sort of may be a setup, so you take it anyway, and turns out it's not. So you've got to let the setup complete. But when you do that, you're golden. So let's take a look at some of these trends that I'm talking about without the setup on them, and then I'll take you through and I'll show you the setup and exactly how it works. So here's our first chart. You'll see down here it went from $1, just under $1.10 to $1.30, so it's not a big price range, but as you can see, it's a nice long trend. Then we have this one here, went from 75 cents up to 95 cents. So again, not a lot in price, but a beautiful long trend. And at that low price, you got a fair bit of leverage. If it goes up by 20%, you're doing fairly well. This one here was in a commodity, went from 800 down here to 1200 up here and then pull back. This one went from 65, there was an entry down in here. You might have been taken out here, but not necessarily. There was another entry here at 75, and then it went all the way up to 128 up there. Here's another one where you had an entry here, or worst case here. So you went from 24 to $38. And here we are on the downside. Now, you have to be careful on the downside because markets can move very far, very fast. So sometimes you can get caught in the wrong way and they will react quickly because you get short covering and things like that. So you have to be more careful in downtrends. Uptrends typically go slower, they're steadier, and they trend in definable legs better than downtrends, because in downtrends people just want to get out and sometimes they just throw everything away just to get out. But it works in downtrends all the same. So here we had a good short entry just in here at $87, and it came down here to $64. Here we had a nice one just in here at 110, and it came down all the way to 50, and you might have been taken out down in here somewhere, or even if you held it, you're in here at 65. Again, this is a commodity from 1500. We had an entry in here, and then we've come all the way down here to 949. So there's $550 in a commodity. Beautiful trade to be on short. Now, here is our setup, and I'm going to go through this with you slowly so you can get it and understand exactly what I'm doing. So as you can see here, we've got this sideways here, and then the market rallies up. So we've got a little swing high here. If you know anything about swing charts, the market swings up, and then as soon as the low there is broken, it swings back down again, and then we rally. So we've got this big strong rally up, and then we come down. So a swing chart, a one-day swing chart, would turn down there. So what we do is, when we come out of a low and we take out this high here, we draw a line across. So I'll just draw that line across there like that. Once it takes that out, we've got our line, and then we wait. And as the market rallies up, and when it makes its first counter trend, we look for the low of the counter trend to be above this high. Okay? Now, if that comes down and just goes back down through here, that invalidates this setup. However, if the market takes out this swing high, so we've got a swing there, up, down, we've got a swing high there. If the market then takes out this swing high while leaving a space in price from the swing low here back to this older high, that's a valid trade setup. So what you do is you have a valid entry above this high here. The beauty of this is when you have a one-day counter trend and it's immediately gone to a new high, you only have to wait one day to know whether you're right or not. So personally, I put a buy order there. I'm not telling you to trade this or anything, but this is my own personal strategy for this. I'll put a buy order slightly above this high here, and then when that buy order is filled, I'll put a stop loss order down here or below this swing, depending on how fast the market gets away. If it rallies like this, I'll just put the stop loss there, because if it comes back down, it's probably going to change trend. But the beauty is, once you see this higher swing high and then a higher low than this swing low, and then it immediately takes out the swing high, that market is trending. And when they're trending, you want to be on board. So we'd have our buy order here, and then away it goes. And what I do is I try and keep my stop loss order just down here at point of entry plus commission, because I've seen this work so often that it typically keeps going. If it comes back down and takes me out, then I'll just sit back and I'll wait for the next one. And quite often you'll get 2 or 3 or 4 in a trend, and I'll show you some of those. So that's the signal. When you have a swing high here, a swing low, a higher swing high, a higher swing low than this low, and then it leaves a space in price from the low here back to this previous swing high, and then takes out the high, that's a signal that this is a valid trade entry. So let's look at the next one. Go here. I'm sorry these are so small, but the trend is so long that it's scrunched it all up. So what we have here is we have our swing high there, as you can see, and the market rallied up and then came back down there. Okay, Now you can't really see it that well because it's tiny, but there is a gap, a space in price from that swing low to the previous swing high. So as soon as it takes out this swing high here, you have a valid buy entry, and then we've gone from there all the way up. And as the market rallies, I typically just put my stop loss below these major swings. I wait for the swing to take out the high, then I'll put it back here, and as it goes up and as the market continues to rally, just put your stop loss order here. And when the market comes down, it might be here, and then you'd be taken out here somewhere. So that's how you manage this type of trade. Let's have a look at the next one. Here we have the downtrend coming in here, and it's a bit messy through here. There were no real swings in here that you could use, but there's one back here. So let's go there. And you'll see this one came up and it came back down and went back into the price range. So that's not a valid entry. What we do is, when that invalidates that trade, we move it up to the next swing high. As soon as this is taken out, we move this up to the next swing high, and then we wait. And you can see here it came up to here, higher swing high there. Even though it's only tiny, we're talking just a few dollars in there. This is $900, of course, commodity, so it's probably several dollars. It doesn't look like much in this chart, but it's quite a few dollars. So we've gone up, we've come down. You can see that little red low there. We've got a nice space in price. Then we've taken the high out here, and then away we go. So we're just under $900. Market's gone all the way up. You may have been taken out here, which is still $200, or you might have kept your stops loose and you might have been taken out up here somewhere. So either way, it's a very nice trade over months and months and months. And the market, just, you can see we've started here 2013, 2014. So this is a beautiful long trending market. It's another one. We have our swing high across there. So we came back down. There's probably one in here, but we'll use this one here because it's more obvious. We've come down, we couldn't take out the high, then we've rallied up, we've come back down. We've got a nice space here. Then once we take out this high, that's a valid entry signal. Now this one came back down, and this is what happens sometimes. Not every time it works. I wanted to show you this one where it didn't work out perfectly well. It's come back down. Now your stop loss might have been just under this low. You would have been taken out. So you would have had a loss from there to there, so a few dollars. Or you might have had your stop loss down below this high. What I tend to do now is I'll put them down here somewhere out of the way. Quite often you'll see the market comes back down and it'll do this, and it will try and kick out the weak holders. And quite often it succeeds. It's done that to me in the past. It's gone down just to my point of entry and I've panicked, and then away it's gone again. When it does that, if you get taken out, you just move along here to the next one. So there's our swing high there. It's come back down. We've taken a long time, but still we've got a space in price all through here. And then we've come up here. Stop loss is here. You move it up here. You might have moved your stop loss to there, so you're at basically point of entry. And then it's come down and it's bitten you again. Damn, this is what happens. So if you didn't take a profit there, you might have had a small loss. Here we go. We're back to this one. Gapped up. Came back down. Big price gap. Look at that. And away we've gone. So this is the thing. It doesn't work all the time, but it keeps your losses to these little tiny amounts. See this? And it keeps you in the trends for all of this time. Let's look at the next one. Here's our swing high there. I'm hoping you can see the swings. There's a downswing, upswing, downswing. Up we've gone now. We didn't really have a swing here, but then we've come up here, big gap up on news, come back down, and then within 2 days it's made a new high. So we've got a beautiful big gap in price here. As soon as it takes out this high here, I would have a buy order there on this day. As soon as it comes down below that low, that day's low, personally I would have a buy order just above the high. And then we've gone 1, 2 inside days, and then a big day up. You filled here at around $23, and it's just gone up and up and up here to $38, and it's back down to $35. So again, it's gotten us in towards the very beginning of this trade, and it's helped us to trade all of this, and that's December 1, 2, 3, 4, 5, 6 months. where you didn't have to do a thing except move your stop loss order maybe. Here's the downtrends again, and as I said before, we've got a nice swing low there, and then we've got swing down, swing up, nice little swing low there up to a new high. Then we've come down, little swing there, but it goes back into this price range, so that's not valid. Then we come down here and we've come up and we've got a beautiful little space in price there. As you can see, this is just falling, bit of a rally sideways, and then away it's gone. And again, all you'd have to do here is just trail your stop loss order down below these highs until you're taken out by a reaction. Again, we're here, so we've got a little swing there, or we could even go to there. Let's take that one across. So we've gone up, that's our final swing in this rally. It's taken out this swing low, so it's made a lower low with a lower high than this high. Little tiny space in price there, and then we would have a sell order below this low. This is our swing low, swing high. As soon as it takes out the swing low, and then down we go. So you just follow it down. Trade management, these are days. This is July, August, September, so we've got 8 months, and you're in for this entire period of time here doing nothing but sitting there watching, and you move your stop loss down every 5 days, 10 days, whatever, and down, and then you'd be taken out in here somewhere. So can you see how powerful this is? Again, downtrend, swing low, come down through, lower low, counter trend rally, nice red candle there, signals that it's opened, it's gone up, it's come down, it's closed below the low, and then the next day it's breaking that low there. So this thing is going down. Once it takes out this low here, you're short there. I would have an order, personally, I would have a sell order here. Again, I'm not telling you to trade this, I'm just showing you what I do. And the order would be filled here, and then falls off a cliff. And then down we go, down, 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 all the way down here, and you'd still be short. So this is a commodity again. We're in here just under 1400. We're down here at 949 with no reason to exit. We've got a stop loss up here at 1000. Now back to the S&P chart, and I'll show you with this on here. If I had known what was going on, there's no way I would have been caught in the crash. So here we are. We've got up here to the high on the 3rd of September. I think it was the 3rd of September. Down, up, down. 50% retracement pretty much, and then there's the final swing low in this counter trend. So once it broke through there, it's saying, hello, I'm going down now, or there's a high probability that I'm going down. Then it's got a swing low there, it rallied up one day, and look at the space in price. This is saying I'm probably going down now. This is not a trade you want to hold on to. And I was loaded up to my neck in stocks and mutual funds right here. And then we have the big day down. It took out this low. So you've got to be out of the market here. And this is 1-2 days before the crash. But even as you can see, this is a real panic. It's only this day here where they really took the baby out with the bathwater. But anyone who knew what was going on should have been out here, and you should have been out of your longs here, because we've got our swings, and this market, remember, was going vertically up. If you weren't alive or you weren't watching the market then, this was golden times. The market was going pretty well vertically up, and anyone who was a trader should have been long and putting a stop loss order under here. So as it makes a new high, you put your stop up, and as it gets further and further extended, you keep moving your stop up. So ideally you'd be stopped out here when the market came down. There were no buy signals in here. There was no other order where it made a higher high and then left a space. Okay, so there was no reason to buy this here. Stopped out here, no reason to buy. Sell signal. This was a perfect short opportunity to be short for the 87 crash, but I didn't know about it. I wasn't watching. I had no clue. Took me to the cleaners, and it took me a long time to come back from that. Here it is on the Dow, same thing. There was the swing lows there. This is just a line chart, as you can see, but swing low there, swing low there. You should have been out of your longs up here, and then as soon as it did this, short here. That's it. That's the trading signal. So if you go back and look at your charts, whether they're daily charts, look for stocks, commodities that trend, and then go back and look at this and see how you would have gone had you known about this earlier than this. And I think you'll be very surprised and very delighted that you took the time to watch this video today. So if you like this kind of stuff and you'd like to learn even more, including the only indicator that I use on my charts to give you a confirmation of which way the trend is, and a whole heap of other things, then I'd like to invite you to check out the video. Just click on the link below this video and you'll see a link there. Click on that link and it will take you to another video where I talk about the Trend Traders Club and what you can have access to as a member. So check out that other video, and regardless of whether you join me in the Trend Traders Club or not, I really hope this video has helped you, and I'll talk with you again soon. Take care.